Yes, welcome. Today we're having a co-hosted webinar in association with the Belgium, the Holland, the Spanish, as well as the Canadian Chamber. And today we're going to be discussing a business defense approach with our three experts from Mazars, South Africa. So we're going to have three presentations. We're going to be chatting about relief options available to SMMEs, tax relief, as well as cost reduction scenarios to address the current cash gap. And to get us started today, I'd like to introduce Sebastian Deplas, who is a director at Mazars. He's going to give us a little bit more context and just to introduce our three specialists or experts today from Mazars. Sebastian?
Good morning, everyone. Thank you, Amy, and thanks to all the Chamber of Commerce that have organized that webinar today and invited us, Mazars, to be a speaker. Most of you know Mazars already. We are an international audit firm. We are present in 90 countries, 25 in Africa. And in South Africa, we have about 10 offices and 1,200 staff. 50% of our activities are audit, financial audit, and 50% are advisory. And unfortunately, in the current context, we had to adapt our advisory expertise to answer our clients' current needs and questions, which are mainly related to COVID-19. Indeed, today we are facing a historical public health issue with a significant economic impact on all our companies, any sector. The purpose of today's seminar is to cover different solutions that could help our businesses to keep their head above water. Some of these solutions and support are coming from the government, like tax incentives, financing options, and some other solutions are internal to our companies, cash management or cost reduction. So my three colleagues and partners from Mazars who will cover these points are Ishan Bhowani. Ishan is our head of public sector director. He was a board member of one of our largest public company in South Africa. He was in charge of risk management and internal audit. He has a very strong experience in working with governments and will give us an overview on relief options available to small and medium-sized entities in the qualifying criteria to access these. David French is our tax consulting director. He spent a number of years working for SAFT before joining Mazars a few years ago, and he will cover our tax incentives topic. And George Ellis is our financial services director. He has more than 20 years of experience in consulting, and he will talk about cost reduction scenario to address potential cash gap issue. The speaker will have about 10 minutes each. So thank you everyone for attending that webinar, and Ishan, I give you the floor. Thank you.
Thank you, Sebastian, and good morning all, and thank you for having me on. I will try and fulfill my obligations as an expert as best as I possibly can. Well, these are indeed unprecedented times for all of us, and more so for businesses who I'm sure are starting to feel the economic pinch of the current situation that we find ourselves in. I think what's important for us is that we must be pragmatic. And as we go through this, we must acknowledge that it's not going to get easier anytime soon. But what we hope to achieve today, my colleagues and I, is to help our clients and other businesses navigate through these tumultuous times by shedding some light on the various options that you may have as a business, both from a relief or funding point of view, as well as some of the things that you can do internally. For my part today, I will share with you what government initiatives are out there and what are some of the relief options that you can access as a business and see if you qualify for these. So let's get straight into it. As I said, my role is to give you an overview of the relief options available to SMMEs. My colleague David will take you through the tax relief, and George will give you some practical insights into what you guys can do as a business to address your cash gap and cost reduction. So from a relief perspective, there's three main categories: relief that we can get for our employees, relief or funding that you can get as an employer in terms of your operational costs, and tax relief to assist you reduce your cash flow obligations in the short term. If we jump straight into it, the first initiative is what you may all have heard of, COVID-19 TERS relief. TERS, which stands for the Temporary Employee Relief Scheme. And basically, this is an initiative for companies that are in distress because of COVID-19. And the aim of government is to try and prevent, to the fullest extent possible, avoiding retrenchments. This scheme is administered through the Unemployment Insurance Fund, and the fund is about 40 billion rand. It's important to note the 40 billion rand is not specifically for COVID TERS, but relates to the national disaster benefit as a whole. In fact, some of the UIF initiatives I'll take you through is part of this 40 billion rand. Who is it aimed at? It's aimed at employers and employees who contribute to the UIF. If you are an employer who does not contribute to the UIF, or if you have any employees who do not contribute to the UIF, unfortunately, the scheme will not be eligible for you. The way the fund works is that the employer himself or through his approved bargaining council would apply through the UIF for this type of funding. The way you would go about doing that is to send an email to COVID-19 TERS@labour.gov.za, upon which you would receive an email back from them, which would give you all the documentation and the criteria that you need to fulfill as part of your application. Now, the employer would do this as on behalf of his entire workforce, irrespective of the size of the workforce, as I had mentioned. The only exception would be where you have less than 10 employees. You would still do it. However, the UIF would pay those employees directly versus paying you as an employer. It's important to note that the benefit may only cover the cost of the salaries during the closure and may not be used for any other purposes. And to give you a simple idea of what you can expect in terms of payment per your employee per month, it's 3,500, which is a minimum irrespective of what sector you operate in. And a maximum is simply put at 6,730. And this maximum is based on a maximum threshold, which is about 17,700 odd. That's calculated on an income replacement sliding scale of between 38 and 60%. So not to confuse you, to reiterate, the minimum pay employee would be 3,500 and the maximum you get is 6,730. And any employee who earns less than 17,700 would get in between that scale. The employer must have closed its operations or part of its operations for a period of less than 3 months and must be suffering from some form of financial distress as a result of COVID. It's important to note here that prior to the 3rd of April, 2020, the requirement was that the employer had to shut down its whole operations. And the minister had signed an amendment to that as at the 3rd of April, an employer can close part of its operations and you will be eligible for this benefit. I think it's also important to mention that it used to be a requirement previously that employees had to have a dedicated bank account to receive this benefit, and that's no longer the case. My advice to you, however, is that if you have paid your employees and you want to apply for this benefit, you should adjust your payroll slightly where you can include or make mention of the TERS benefit as part of your payroll. So it becomes easier when the UIF is paying you and they want to audit it. It becomes easier to manage those documentation. It's also important to note that the employer must pay its employees the benefit within 2 days of receiving the money from the UIF. And you must keep all accounting records relating to the memorandum of agreement that you have to sign with the UIF and the COVID-19 benefit for a period of 5 years. If you require further information on the TERS, as with all the other benefits, our email contacts are at the end of the presentation and you can email us directly, as well as part of the Q&A after this. The other benefit that's offered through the UIF is a benefit where employees are forced to reduce or to work reduced working hours, or there's a loss of income due to illness or death. I've listed the relevant sections of the UIF Act for your own reading pleasure. I'm not going to go through it in detail, but essentially what this is aimed at, it's aimed at employees now who suffer loss of income through reduced working time, illness, or death to apply through the UIF to get some sort of relief. The difference between the COVID TERS and this is that the employees would do this on their own. It wouldn't be through the employer. And the loss of benefit is calculated as per the UIF Act. It's important to note that the claim can only be the difference of what the benefit will be versus what the employer pays. As an example, if the employee is entitled to a benefit of 5,000 Rand, and you as an employer pay your employee 3,000 Rand, he is only entitled to the 2,000 Rand difference, cannot claim the 5,000 Rand on its own. The key criteria as to whether you will be eligible or the employee will be eligible for this benefit is set out in an easy aid guide that was developed by the Department of Employment and Labor. I'm happy to share this guide with you as part of the presentation that will be shared. Special mention is that you can only apply for one of the two benefits, either the UIF reduced work time, illness or death, or the TERS. You cannot apply for both. I think it's important to note, and I've been getting many questions from some of the clients around those issues. Secondly, employees who fall ill due to exposure at the workplace would have to apply through the compensation fund. There's a special compensation fund that's set up for those employees who get ill or are exposed through the workplace. Some of you may have heard of the South African Future Trust, and this is a trust that was set up independently by the Oppenheimers. The fund is about R1 billion, and the intent is to assist SMME employees that meet predefined criteria with loans. I want you to pay special attention to the fact that it's on a first come, first serve basis, and that's how it would be handled. Eligible SMME employers may apply for the scheme through the preferred banks. There are certain partner banks that the trust works with, and that's ABSA, FNB, Mercantile Bank, Nedbank, and Standard Bank. Employees of participating SMMEs through this initiative would receive interest-free loans. However, you need to note that the employees themselves do not carry any liability. The liability is carried by the employer. And here with the other funding mechanism, the aim is to assist businesses try and reduce their cash outflows by accessing funding that will pay employees directly. So you as a business, that portion of that payment that you normally make to the employee, you can get some sort of relief through this process, and therefore the employer has to then carry that liability eventually. How it works is that permanent employees would receive weekly payments of about 750 Rand per employee over 15 weeks. And what this amounts to practically is 11,250 Rand in total per employee. And the full amount of the loan would be dependent on the number of employees that you would apply for. There's no restriction in the terms of the number of employees. And as I need to mention, the criteria may differ amongst the partner banks, but generally it seems to be that you must be able to prove that you are impacted by the COVID-19 in terms of your operations. You need to have been trading for at least 24 months or more, and be in good standing with your bank, have a turnover of less than 25 million, and this includes sole proprietors, partnerships, operating trusts, CCs, and PTY limited. So basically, it's open for anyone. Special mention is that full-time employees are eligible, but contractors do not qualify. As I had mentioned, the employer bears the liability, and the loan must be paid in full by the 31st of December 2025. The loans are interest-free, and there's no repayment term. So essentially, you can pay that in 2 years, in 3 years, or over the loan period, as you may agree with your specific partner bank. What I would like to encourage any of you who are considering accessing this specific initiative is to do so very expeditiously. As I will discuss with some of the other initiatives, they have been oversubscribed very quickly. And as with this one, it's on a first come, first serve basis. So as a business, you need to make some decisive, some quick, decisive moves. And if this is something that you are interested in, I would encourage you to do it as soon as possible. The next one is a debt relief scheme, which is offered by or administered by the Department of Small Businesses. The fund size isn't that great. It's about 200 million. And what it essentially is debt relief finance scheme for businesses that are negatively affected by the pandemic themselves. It relates to a period of 6 months, and it's specifically for the payment of employee wages, rates, taxes, or working capital. What's important to note again is that this is not a subsidy, it is a loan. The loan is provided to you as an employer to provide assistance to your employees or to use for your working capital. And it's at a rate of prime less 5%. However, if upon audit or review, it is found that you've abused the loan for whatever reason, and abuse is not defined, you will be required to pay the loan back at prime plus 10%. Some of the key criteria that applies under this is that the business must have been registered with the CIPC by the 28th of Feb. Companies must be 100% South African owned, and employees must be at least 70% South African. As it is administered by the Department of Small Businesses, priority will be given to businesses owned by women, youth, and people with disabilities. As with most of these things, you must be registered and tax compliant with SARS and the UIF itself. The fund size, as I mentioned, is 200 million. And if you want to access this, you've got to register on the website that's provided as part of the presentation. The next scheme that is also administered by the Department of Small Business and very much similar to the previous one is the Business Growth or Resilient Facility Scheme. And this is aimed at businesses geared to taking advantage of the supply opportunities resulting from this coronavirus pandemic or the shortage of goods in the local market. And the process is the same, the loan requirements is the same. Just a bit more detail there is that the categories is for micro businesses, the facility will be between 50,000 and 250,000, small businesses between 250 and 2.5 million, and medium businesses from 2.5 up to 5 million. The criteria are exactly the same as the previous one. I'm not going to dwell too much on that. And as you may know, there are other funding mechanisms that is being offered. The Department of Tourism offers tourism relief funding for those entities or companies that fall within the tourism sector. The fund size is about 200 million, so it's not that large. And essentially, the intent is to assist SMMEs in the tourism and hospitality sector who are under particular stress due to the travel restrictions. The criteria are listed, but again, it's about being registered with the CIPC, being in good standing with your tax. And with this one, it's companies with a turnover of less than 2.5 million per annum. So as you can see, it's aimed at really the small businesses where you have turnover of more than 2.5 million per annum. Unfortunately, you will not be eligible. With most of these schemes, turnover is not necessarily turnover that you may have had in your past period. If as a result of the virus or lost revenue, you foresee that your turnover in the current period is going to be less than the stipulated criteria for these things, you may still apply. The IDC has also quite a few funding initiatives, and you can access the information on the website, but essentially there's various funding instruments for the acquisition of manufacturing of essential supplies. Essential supplies is defined in terms of Treasury Department, and there's quite a comprehensive list that's published on their website. The IDC loans for these trade finance is at prime plus 1%, and the other loan facility is at 2.5% per annum, and any guarantees that are given at 2.2% per annum. It's important to note the maximum term of all of these facilities is 3 months. There's a further 700 million in terms of working capital support. So essentially, if entities need support in terms of their operational activities, they may apply for some of these initiatives. There's 300 million allocated to the IDC, 200 million to the Small Enterprise Finance Agency, and 200 million for the National Empowerment Fund. Pay special attention to the fact that there's only specific sectors to which these interventions apply, and that's in the mining and minerals sector, the agriculture and agro-processing sector, and the automotive industry. If you are suppliers in some of these sectors and you are not sure, you are welcome to contact us, and we will try and assist you together with the IDC to determine whether you might be eligible or not. One of the funds I was referring to when I mentioned the rate at which the application comes is the Sukuma Relief Program, which is due to the Rupert and Remgrow contribution. The fund size was sitting about R1 billion. Basically, it was an interest-free loan for 12 months for small businesses, and this fund was oversubscribed by 1.8 billion in 3 days. So, as I mentioned, there are many businesses scurrying to get access to this funding, and as a business yourself, if you want to access some of these things, I encourage you to be very, very decisive and act quickly. The Motsepe Foundation and Sanlam Trust, which is about R1 billion. This fund is used for things like sanitizers, protective equipment, and assisting university students. You cannot access any funding at this stage. There's very little information out there. But from what I'm led to believe is that the foundation itself will determine where the funding goes to and will not be open for applications. But if there's more detail that's available, we will update this on our website. Many of you have heard of the Solidarity Fund, and currently it's sitting in excess of about 2.3 billion rand. It's important to note that this fund is not accessible. The fund would decide on how the donations are spent, and it seems that for now, it's predominantly for the health response and humanitarian efforts to curb the pandemic. And there's not much information available at this stage. So in conclusion, I wanted to give you a brief overview of some of the funding that's available to businesses. This might change, and we will update our website if any of these things changes. The information that I provided to you today is based on publicly available information at this point in time. And as you can tell, there isn't a plethora of funding options out there. Indeed, some of your businesses might not be eligible for any of these things. These businesses, and even those that might apply for some of these fundings, would need to make quick and decisive financial adjustments to ensure their profitability and sustainability. And I think you must pay special attention to my colleague George's presentation, who will provide more insight into some of these financial adjustments you can make. So thank you all. Good luck to you. Please stay safe. And seeing as the audience is mostly European, I would say ciao instead of cheers. Thank you.
Thank you, Ishan. Coming on to the tax things, and Ishan's going to help me move on the slides along, if you would. Are you still presenting?
Yeah.
Ishan commented a couple of times on the need to be tax compliant, and that follows through with everything in the tax sphere. What we have is two basic concepts. One is cash flow relief, and the other one is giving something back. And we'll run through the specifics of each of these quite quickly now. So the first one is one that many people have heard about already. That's the PAYE relief for employers who are small businesses, SMMEs. This doesn't just include companies. It includes individuals, trusts, anyone else who has a turnover effectively from business. And our turnover for these purposes is defined as gross income from the Act. And as long as you have turnover of less than 50 million Rand for your year ending anytime between 1 April 2020 and 31 March 2021, you may be eligible for this. What we do is we defer 20% of the PAYE for the months April, May, June, and July. That deferral will be free of any penalties and any interest. And you can start repaying that with your normal PAYE payments, with your normal August payment from the 7th of September. So that will be repayable over 6 months. And as we say, as long as you do your repayments properly, interest-free. So that's the first of our deferrals. After that, we have the provisional tax payment deferral. This one, again, for SMMEs, And again, it's not just companies, but any entity that is doing business. One thing to note with that, your turnover below 50 million Rand also required is the fact that you don't have more than 10% of that gross income from passive income. So you can't have too much from passive employment incomes. You must be running a business. In this particular case, your first and your second provisional payments, you can pay less than you normally would. Normally in our first provisional payment, and this is for any period, provisional period between 1 April 2020 and September 2020, normally you would pay 50% of your estimate for the year. Now you can pay only 15%, that's 1/5, rather than the 50% of the payment. The second provisional payment will be in the period from April 2020 all the way through to 31 March 2021. And in that case, instead of paying 100% of your estimate, you only pay 65%. Again, you're going to have to repay this at some time to avoid your penalties and interest. And this all comes through in your third provisional payment, which happens 6 months after your year end. There you will have to have by that stage paid the full 100% of your tax provision estimate. So again, no penalties and interest if you make the payments within the correct times. Okay. Just to keep things all together, we have a deferral of interim payments. This is effectively provisional tax payments for micro businesses. Now, a micro business has a qualifying turnover of less than 1 million Rand, can't have any professional services, and in some cases can't have passive income. Again, must be tax compliant. It follows exactly the same scheme as the provisional tax payments, except for they don't have a third topping up. So any final payment will be done on assessment. Not many, of our members probably will be in this category, but it's well worth remembering that we can do this for micro businesses as well. Okay, moving on to what the government gives back in a way is the employment tax incentive. Here, if you're on the employment tax incentive at the moment and you are getting your subsidies through the ETI, you will be extended by 500 Rand per month per qualifying employee. And then in addition to that, for all those employees who are between 18 and 29 and for whom you can no longer apply for an ETI because it's beyond 2 years from employment, you can get the 500 Rand subsidy again. And also for all employees over 29, so from 30 to 65 who have never qualified for this, you can get your 500 Rand subsidy. The important part of this is that your employees need to be earning less than 6,500 Rand per month. It's not open to anyone earning more than 6,500 Rand a month. So for employers who are registered as employers as well with SARS on or before 1 March 2020, so you can't run off and register now. It's for those registered employers. We have access to a little bit of money back through the ETI under certain circumstances in respect to the low-paying employees. Also coupled with that is that for the next 4 months, if an employer is due an ETI refund, then that employer will be able to get it on a monthly basis rather than the half-yearly basis, which SARS normally pay the refunds out. So the law has just been opened up for SARS to make those refunds on a monthly basis to help again with the cash flow and get it back to the qualifying employers. And then finally, in the tax realm is the customs duty and VAT on import of essential goods. These have been made fully rebated under both the VAT and the customs duty schemes. This is done by way of application to ITAC, the International Trade Administration Commission. They've got all the details on their website and the forms, and we have a team of people who are corresponding with ITAC. You get your certificate from ITAC, and it also goes to SARS, and anything on the essential goods list or the raw materials to prepare those essential goods is then zero rated or fully rebated for customs point of view on entry into the country. That's the only, from the VAT point of view, the only relief that has been given. Any output tax that normally has to be paid, we've seen nothing in order to give relief on payment of that. So we wait to see more. We've seen the draft law. We're waiting to see the implementation from SARS, and we're watching carefully. So a lot of the devil is in the detail, and we wait for that to come to us in due course, and we'll be corresponding with our clients about the detail as we go along. And that is, in summary, the tax breaks that are being given at this point in life. And we wait to see how much more we get out of SARS in the next couple of weeks. Thank you.
Good morning, everyone. George here. Can you hear me? I guess so. I guess from a Mazars perspective, we've looked at how can we drastically support our clients in a very short sort of term type of engagement, and also on the sort of slightly longer to medium term basis, given that we potentially might be looking at economic downturn in the medium to long term as well. So Ishan, you can move on to the next slide. I guess those three types of interventions that we help our clients with. The one is firstly to model the cash gap and understand what the funding requirements are. And I guess the next one would be a short-term cost reduction exercise, rapid cost reduction and results management, to make sure the business survives and fills the cash gap as much as possible. And then more or less the medium to longer terms type intervention of planning for the downturn and making sure that the businesses are set up for either the downturn or the rebound, depending on the curve that we expect. So I guess I'm going to just focus on two of the short-term ones at this point, which is modeling the cash gap. And across the three solutions that we provide our customers with, we mainly use three core skills. The one is obviously modeling skills, and we use members of our corporate finance team that understands how to model at speed. Financial skills, mostly qualified chartered accountants, and then industrial engineering skills, which is all about lean operations and taking cost out of operations permanently and or support services. Let's look at the cash gap and funding requirements quickly. The first step is determining the cash gap. And I guess we'll be modeling several scenarios in that case. Probably a sort of aggressive scenario first. That is probably worst case. And then maybe two or three additional scenarios to see how we tackle the cash gap. Then we prepare the cash gap plan, and that is very much around determining what available support requirements we might have from government, banks, investors, or any other sources of funding. And I think a large part of this presentation has dealt with that. We can also determine the short-term cost reduction or expense deferral program, and that will normally take us about a week to drive out the initial quick wins on that. Then it's about releasing finance from internal resources and key relationships, preparing a revised cash flow statement based on the remedial action plan, and determining the amount of additional external funding required given those actions. We certainly want to quantify the impact across those scenarios and look at how we plan to close the cash gap. Obviously, working capital optimization is quite a big part of that, and how do we fund that, and how do we optimize that part of the balance sheet. We can then also start preparing the cash flow statements that each one of those scenarios would most probably or most likely produce, and that would be handy for any interaction with your bank or funders. The funding requirements submissions can then be assisted with as well. Thank you, Ishan. The rapid cost reduction exercise is much more aggressive. We there want to mobilize a small team of chartered accountants and possibly industrial engineers to look at how do we reduce overhead costs and operational costs as well. Overheads normally gives you around about 5 to 15% of cost savings, depending on the business and the industry, while operations can, over the medium to short term, be somewhere in terms of 20 to 30%. So that is extremely aggressive, or could be extremely aggressive. We will identify, prioritize, quantify, and plan cost reduction opportunities, of which the businesses then needs to decide which triggers they want to pull and develop the implementation plan. The whole cost reduction project must then be mobilized and executed and tracked and made sure that all of the results that we planned from the cost reduction exercise are realized. So that's basically the two short-term interventions that we support our clients with. And I think, as Ishan has indicated, in this scenario or in these interventions, quick and decisive moves remain very important. So it's about making the plan, working the plan, and changing the plan. But in the end, making sure you have a plan. Let me give back to Seb.
Okay, thank you very much, George, for that, as well as to David and Ishan for that brief overview and presentation. Just to let everyone know, we'll be distributing a copy of this presentation to everyone following the webinar. And because I'm cognizant of time and I know there's a lot of content today, I think we're going to go straight into the Q&A session. Can I just check if all the panelists can hear me? Can everyone hear me?
Yes, can.
Yes.
Okay, perfect. Perfect. Thank you very much once again. I'm just going to go straight into the Q&A session because I see there's a lot of questions for the panelists today. So I'm just going to read out, just a reminder to those, if you would like to pose a question, you can either raise your hand. The hand button is located at the bottom and we will unmute you and you can ask your question live. Alternatively, there's a Q&A box located below and you are able to type your question there. Okay, perfect. We have our first question and I believe this may have been touched on briefly already, but I think because we have a lot of the bilateral chambers here, I think this question is quite applicable. So I think maybe if we can just recap this one to start. We would like to know regarding the relief fund and companies owned by non-South African citizens, but who are, however, so they're foreign nationals, but are, however, permanent residents. What kind of relief can we expect from the relief fund for these companies?
Okay, I will attempt to answer that. Thank you very much. In terms of the funds that specifically require, should be owned by, sorry, I'm just trying to put my video on. Apologies.
Your video is on, Ishan.
Okay, thanks. The funds that have a specific requirement to be South African owned, the legal form of that entity would take precedence. So if the legal form is that you are South African owned through your directors who are permanent residents, then it does become a South African owned entity. If it's non-South African owned through foreign shareholding and those type of things, then unfortunately you won't be eligible for those funds. Funds like COVID TERS does not specifically require them to be 100% South African. So again, you need to ensure that the eligibility criteria, you understand them to see whether you can access these funds or not.
Okay, perfect. And before we get to a question, we have one brave taker who would like to ask a question directly, and I believe that is Gilles. Guillaume, can we unmute Gilles so he can ask his question?
Hello.
Hi, Gilles. How are you?
I'm good. How are you guys? Thanks a lot for the presentation. Great stuff. Really appreciate that. My question is about tiers for the COVID. I've actually applied already 3 times because like every week we've got new documents to submit, new MOA, new templates for the CSV we have to submit. Do you have an idea of what's going to happen next? Is it going to be like a new procedure, or do you have some feedback about the way we have to submit tiers?
Sure, thank you. As I had mentioned, yes, the reason for the change was the criteria to access TERS was quite restrictive in that organizations had to shut down completely, organizations had to have a dedicated bank account. And I think the ministry had realized that it was quite onerous. Even some of the, as you would know, you've applied a few times, some of the file and information that they required was in a very convoluted format. So they've, as of the 4th of April, they've revised this thing. I'm led to believe that this is now the final process. Again, just to make sure, what I would encourage you to do is to send the blank email again. Every time they update their process, they do have it updated on that email. So if you send that blank email to the COVID-19 ters@labour.gov.za, immediately you would get a response with what are the requirement documentations. I sent one yesterday as well, and the response I got is the same as of the 5th of or 6th of April when I sent it last. So I think now they've bedded down the process. I think it's very clear. And I think the employers can go ahead and employ. And there is also a hotline. I don't have the number on me. I can include it as part of our pack that you can call to find out where your submission is in the process. Thank you.
Okay, I see we have a lot of questions related to tiers, so I'm going to try and group those together. So just following from that, Ishan, we have a question. If you can clarify, if you know, how long does the tier scheme take to pay out? Any idea on that one?
Yeah, I'm led to believe it will be within 1 day of your application being successful. And I think it's important for me to mention now that the application process, even though they've refined it, is still quite onerous. There's still quite a lot of requirements on the employees themselves. So I would encourage employers to make sure that they thoroughly go through the application documents and processes, because they don't want to prevent any holdups in terms of payment. Payment, I'm led to believe, happens quite quickly. In fact, the TERS has already paid out about 340 million odd to employers now. And government wants this to be a quick, dynamic process. And that's why they're even saying once they pay you, you have 2 working days to pay your employees as well. So I'm not, I can't remember exactly what it is, but I'm led to believe, I think it's maximum 21 days, provided though that your application is complete and you are eligible.
Okay, perfect. And then we have another question from Anonymous, and they would like to know, does the tiers apply to employees who receive a basic salary and commission?
It applies to all employees who are registered and employees who are registered with the UIF. So like I said, the structure of the payment is not really that important at this point, because it pays a minimum benefit and a maximum benefit and in between. So if you are a salaried employee that's earning less than 3,500 and your commission takes you to more than 3,500, you still get a minimum flat rate of 3,500. If you are anyway in between that scale, I would presume, I'm not sure, that it would be your basic salary, because commission is a variable thing. It would be your basic salary which would determine what the benefit would be between 3,500 and 6,730. Even though I'm not certain, I would presume that it would be just your basic salary that would determine how much you would get in between the minimum and the maximum scales.
Perfect. And then since we're on payment, do you know if this payout will be paid monthly or it will be a lump sum from tiers?
Yeah, it would be a lump sum, but it is determined on the first 21 days of lockdown and then the second extension period thereafter. It's a lump sum based on the number of employees that you have submitted. And thereafter, you are expected, or through your bargaining council, to pay those employees directly.
Okay, so then will the payment go directly to the employer and they then pay the employee, or to go directly towards the employee?
No, it goes directly, where you have more than 10 employees, it goes directly to the employer or your nominated bargaining council, and you are expected to pay your employees within 2 days of having received that payment. Alternatively, where you have less than 10 employees, the UIF pays directly to the employees.
Okay, perfect. And then I see we have a question, so I'm just going through them. From Roberto, again, we're asking, okay, he's got 2 questions. One again about foreign-owned companies. So he just wants to maybe clarify, because I see there's quite a common question here. Which schemes are available to foreign-owned companies, totally or partially, operating in South Africa? And
okay.
Yeah, we'll deal with that one first. Sorry.
Okay, sure. Well, for now, sorry, I'm just going to it. It also depends on the type of industry that you're in terms of what the IDC requirements are. Though those are industry specific. There's no mention in terms of whether you're foreign or you're locally owned. TERS is applicable to any entity, and the schemes that I have listed in terms of the presentation, which will make available, where it says that you must be 100% South African, or most of these relate to the debt relief scheme and the facility schemes. Those are, you have to be 100% South African owned as their eligibility criteria. So there are schemes that are available that are not where there's no requirement to be 100% South African owned. But again, also some of them depends on the type of industry that you're in or the type of products that you're producing.
And does your BEE score have anything to do with how your ability to access these funds? Is it a factor in how to access?
No, it's nowhere is it defined as a factor. However, you would see that as an example, the Department of Small Businesses has a preference for entities, whether you be not, that are women-owned, people with disabilities, and those type of things. At this point in time, none of the schemes that I recall are in terms of BEE specifically.
Okay, perfect. See, this is a very popular topic today. So thank you very much, Ishan, for answering all these questions. You're definitely the man of the hour, it seems. So we have another question related to tiers. And this one, sorry, it's just jumped. This one is from Carly, and she asks, if we are still paying employee salaries in full, from a humanitarian point of view, so they're paying their employees in full, can we still claim from tiers?
The answer is yes, you can still claim. The benefit will be limited to the minimum or maximum or anywhere in between. So as an employer, you may be paying your employee 15,000 a month. You can still claim that portion of 6,700, which is a maximum. Again, I would encourage you to just adjust your payroll slightly, that where you have already paid or aim to pay your employee, you indicate that it's in relation to the TERS benefit. And there you as an employee can then retain what the UIF pays towards you, provided that you have already paid that portion of the benefit onto your employee. I hope I've answered that.
And then we have another question from Gerald. I think it relates to the use of these different funds simultaneously, but he asks, can those different benefits be culminated?
Yes, you can. A typical example is what David had spoke about. If your employee is earning less than 6,500, the employee can take advantage of that 500 subsidy, and you can apply for TERS as well. There are certain things where you cannot apply cumulatively. An example is you cannot, on behalf of your employees, apply for TERS and for the UIF reduction in work time. You have to apply for one of the two. But there's nothing that stops you as an employer from applying for multiple of these funding options, provided that obviously you meet the eligibility criteria.
And then we have another question related more to a timeline this time. It's from Mr. Kutsia, and he asks, is the online submission portal working? And in addition to that, can you claim for the period that you sent employers on forced leave up till the 16th of April?
Okay, I will speak. I'm presuming it's in relation to TERS.
Yes, I believe so.
Yeah, because the number of funding thing. For TERS, the portal is open. As I said, you need to send an email to the dedicated email account for the TERS. They will respond and give you the specifics about where you need to submit your application to. In terms of employees that were meant to go on forced leave, again, it's treated as if you had employees in your normal business operations who had went in leave in any case, provided that you had paid the salary or you are under financial strain to pay those salaries, those employees are still eligible. So leave at this stage is immaterial. However, as part of the application process, the commissioner does ask you to indicate those employees that you have put on leave and what kind of leave provisions they are.
Fantastic, thank you. And then I think, well, we're definitely dominated by all these tiers questions. And I feel like we have answered most of them thus far. So I have one more question that's also related to BEE. And this one reads, since BEE requirements are often a cost, is there any plan for relaxation on local content and skills development during the crisis period?
That's actually an excellent question, one which I don't have the answer to right now, but I promise that I will reach out to the people that I know and try and get back to through to yourself in the next day or so and see whether we can answer that better. I don't want to give the incorrect answers right now.
Okay, perfect. And actually, that seems to be all the questions. So I'm going to give, while we just do a bit of a recap, I'm going to give everyone a last opportunity for those who haven't asked a question and really have a burning desire and would like to benefit from the expertise here today. All 70 of you present currently. If you have any further questions, please feel free. This is your last opportunity. We'll take a couple more questions if there are any. Otherwise, I'd just like to say thank you very much for the precise presentation given by Mazars today and for lending your time and expertise. Just a reminder that we will make available this presentation to everyone as a good summary. And then alternatively, if you have any further questions or would like to reach out to Mazars' team, please do get in contact with the FSACCI team or your bilateral chamber that you registered through, and we will put you in contact with Mazars, and I think they'll be able to directly answer any specific questions that you have following from today's presentation. I see we have a couple more questions, the latecomers. So we have one from Ian. He says, still not totally clear on permanent resident owner status to apply. I think this is definitely a common question. Can we just have one more time just to recap clearly where do, for example, French companies or Spanish companies stand in South Africa in terms of claiming from these different funding options?
Sure. Look, I think what we will try and do is give a more concrete legal answer to that via written form. But my understanding is that the legal entity, the substance of the legal entity for where the eligibility criteria is that it must be South African owned, the legal form of that entity, even if it's South African owned but by foreign nationals, as long as they are residents in South Africa, I don't foresee it as being a problem. But let me rather, so that we we clear up all the confusion once and for all. Let us reach out to our legal team and provide a definite answer to that, so that you can distribute to your members. I see that is a point of contention, so we can understand it better.
Okay, perfect.
I commit to doing that in the next day.
Yep. Okay, no, that's perfect. I think that information will be very useful for all the chambers and their respective members. So we'll definitely make sure that we distribute that information within the next couple of days. So you have all the information, both legal, in one place. Then we have another question from Mr. Goddard, who asks, I don't see anything on the event industry anywhere. Will there be anything that might become available? I believe that was dealt with, if I understand the question correctly, with the funding made available by the IDC. I don't know if there's any further comment on that question from your side, Mazars.
Yeah, sure. The Department of Tourism has also allocated 200 million to tourism and hospitality, which I presume events industry would fall under. So they can access that funding, provided that the organization has a turnover of less than 2.5 million and they meet other eligibility criteria. You can access that funding as well.
Okay, perfect. And I think that concludes our question and answer session. So I'd just like to say thank you very much again to the Mazars team, to David, Ishan, and George, as well as Sebastian. And a big thank you to all the participants today, particularly to our fellow bilateral chambers. We have present today the Belgium, the Holland, the Spanish, the Italian, as well as the Canadian chamber. So welcome and thank you very much to all those who attended through the various bilateral chambers. Like I said, I'm sure there's a lot of questions and some clarity needed with regards to foreign-owned companies in South Africa. And as Ishan has said, we will relay that specific information through to you within the next couple of days. So on that note, thank you very much for those who have attended today. Please feel free, I know from the French chamber side, but I'm sure all the other bilateral chambers, if you do need assistance, please do reach out to your respective chambers. We're here to assist, we're on hand. And on that note, I'd like to thank you, Ishan, George, and David, for your time once again and your expertise. And we will definitely relay any information to you guys if anyone has any further questions. So thank you very much. And we wish everyone a productive lockdown period. And also, please stay safe